Hi, everybody. This is Bill Kenny, and I want to welcome you to the entrepreneur community's crazy focus on investment versus customers. I think we have a really good webinar for you today. I'm really looking forward to any and all feedback. I would encourage you, we do have a bunch of questions. I'll show those in just a moment. But I would I would challenge you to submit additional questions. You'll find an ability to do that. There's a chat feature that you should have on your window that you're viewing this from, and you can type in any questions you like. I'm going to, the kind of process we're going through, I'm going to put some slides up. I've got probably a fairly decent presentation here, and then we'll hit your questions, both the ones that you pre-submitted and any that you submit as we go here. So again, really excited to have you here. I'm going to go now and pop my slides up on the screen, and it'll just take a second. You should now see my screen. My slides should be up. And so again, our focus today is the entrepreneur community's crazy focus on investment versus customers. And so let me kind of frame this just real quick. What we see is that there's a lot of focus on sort of identifying outliers, on identifying unicorns, as they're generally called in the venture investment world. And essentially what that means is that there is a lot of attention put on finding sort of, if you will, the next Facebook. And this happens on university campuses. It happens in accelerators and incubators, and that's really all over the world. And any type of venture development program, by and large, the main focus is finding these outliers. And so our process here today, what we're going to do, will really challenge you. I think there'll be a paradigm shift. Certainly that's our intent. You'll see just based on the questions that are submitted, we've got a lot of interest in this topic. We'll have a fair amount of people on this webinar as we go, and I know a lot will watch it in the coming days as we release the recording. So again, we really encourage your feedback and your questions. This webinar will kind of follow this track. We'll give a little bit of the background on this perspective and kind of the way, sort of the current situation. We'll talk about the big challenge, excuse me, challenges that we see, what happens as a result of these challenges, then some of the available remedies and some specific case studies that we've seen that will help amplify these remedies. And then again, we'll hop right into your questions. Just so you understand a little bit about where I'm coming from. So I'm the founder of a company called Test My Pitch. As sort of our business has evolved, we are in contact with people that run programs at universities and in accelerators and incubators and ecosystems throughout the world. We travel quite a bit, both domestically and internationally, to various customer and prospective customer sites. We're involved and speak at many programs around the world, and certainly, our perspective is probably pretty good. But our disclaimer is certainly that we haven't seen everything. But that said, we essentially see thousands of pitches every year, and since we started 3 years ago, have probably been to well over 1,000 pitch events. And so we see a lot of this, and we interact with quite a bit of the community today. So, and again, the goal of this webinar is not to sell in any way, but just so you have some context and you know a little bit about what we do. We have two tools. One is Test My Pitch, and maybe the easiest way to think of that is that it's a batting cage for communication skill development. So could be entrepreneurs, could be students, could be professionals, use our platform to develop their communication skills. And so we sell to universities and economic development organizations like accelerators and incubators, and then some corporations. And our Score My Pitch tool is simply a judging application for scoring and giving feedback at pitch events. So getting into our topic, let's talk about the background here. So there are literally tens of thousands of programs that that exist today. They could be in the community, such as Startup Weekend and all the sort of various forms of that. Could be in the universities with different pitch events, either cross campus or if you will, inter or intramural. There are certainly many accelerators, Techstars certainly being one, but there are really thousands of accelerators even around the world. And then universities have a variety of programs besides their events, and some are venture programs, and there are all different types of venture development programs. So you see a lot, just an enormous sort of industry built around the idea of maturing young or nascent or early stage ventures and entrepreneurs into sort of taking them from fledgling to success. And for those that aren't familiar with Startup Weekend, they're 54-hour pitch events or 54-hour venture development events where they result in a pitch at the end, or a venture pitch at the end. They start with what's called an idea pitch. But this industry essentially has developed sort of almost a standard, and so we want to talk a little bit about about that standard. And so there are really sort of 3 steps to this sort of standard that's being sold today through all of these different organizations and institutions. And the first is that the entrants or the participants come in and they share an idea. It's usually an idea pitch. And so they share the idea, and this is sort of the dream that's being sold to the people that participate. So you pitch your idea, you get investment. People believe in you and they give you investment, and then you buy a yacht. And so it's kind of those are the sort of big 3 steps that we see that are sort of, that's sort of the brochure that is given to these nascent entrepreneurs. And ultimately this is all good, but the reality is that only 1 to 4% of ventures ever receive investment, and that's actually generous. We've actually seen a fair amount that's telling us that it may even be less than 1% of ventures that are seeing investment, but it is let's just take it the very best case. 96% of the participants in these programs are not getting investment, but they're being sort of led down this track that investment is the right answer. And so we want to certainly talk through that and the challenges that happen because of this. And there are very few programs that are exceptions to what we're going to share here as challenges. At least, again, our vision isn't perfect, but we travel a lot. We talk to a lot of people, and we have really dove into the ecosystem pretty far. So the first big challenge, big issue is that it's really all about the idea pitch. And a lot of these programs, that's where it starts. You enter day 1 or the first sort of experience. The first part of the agenda in many of these programs is an idea pitch. So from there, the judging criteria for these pitches, if that may be an endpoint or that may be sort of a launching point, but ultimately the judging criteria is all around investment, and that's what it's aligned with. The judges in these programs are generally all investors. That's where the sort of the alignment is too, is that we bring in the angels, we bring in the venture capitalists, and those are the people that end up judging and giving feedback for these early stage ventures. And these investors come in many forms. Sometimes it's competition, sometimes it's large community events, other times it's in a university. But again, that idea that more often than not, the judges are investors. And the third or fourth big issue that we see is that the sort of outcome is that there are cash prizes, and so that can tend to misalign the objectives and the sort of purpose in what's being done, and you'll see as we go that there may be some better solutions. So what we want to talk about now is what happens because of sort of these four general issues. Number one is that there is no or very limited problem validation. So in other words, if we start with an idea pitch, that means we already have the idea. We've sort of skipped by the problem. We've said we assume the problem, and we're going to go now and have a solution. And what we end up with is a lot of solutions looking for problems, and it becomes very efficient. So there's no problem validation, huge issue. If the solution is already determined when the team forms, then it is fixed. There's no adjustment. And so the team has to accept the solution because somebody's pitched an idea, so the team forms around that idea as opposed to something that's more flexible. Right now, the team's coming in and they're sort of being expected to sort of take this sort of fixed idea or mostly fixed idea and make it pretty. And ultimately, the team then invests in that idea. They are now focused on sort of putting all the chips into that solution and sort of, let's put it all on red or all on 5, and the bet goes in. And so they're investing their emotion, they're investing money, they're investing, sort of the cost, the opportunity cost of, how could they spend their time otherwise? But there is tons of emotional attachment now to this solution because we've sort of said this is a solution and we're going to build it. And then what ends up happening is because there is so much investment in this solution, both emotionally and physically and financially, the founders become very defensive when they're mentored or when they get judged to any feedback that's offered. So they tend to be resistant or to explain as opposed to inquire, as opposed to being empathic and looking to understand. They defend their pretty baby. Additionally, because of the sort of steps we've gone on so far, there tends to be more limited iteration because so much investment has gone into the sort of the first iteration. There's not much left from a financial, emotional standpoint, besides the fact that we're not empathic and not listening and we're defending and deflecting. We don't tend to evolve the product very much. So we end up sort of with this sort of fully baked solution that may or may not fit a market problem. And the lack of traction at the end of the program or the end of the process limits the investment or eliminates the possibility of investment. The ventures are so underwater that there's zero options left in terms of how they might evolve or what they might do. So again, the absence of traction reduces or eliminates sort of almost all options. And so the people that participate are generally one and done. They have that experience and it's not very good, and they take their ball and they go home. And when I say the people that participate, this is not just the ventures, that sort of the young or first experience entrepreneurs. This is also the investors. When we ask investors to come into a room and view ventures that aren't yet ready or aren't investable, then or aren't open to ideas and feedback, then it's very difficult to get those investors back as well. So I mean, ultimately, this is an ecosystem. An ecosystem, so the sort of founding principle of any ecosystem is the idea of building interdependence, not dependence. And so we want to make sure that that there is a way to find and develop aligned self-interest, which is really important. So obviously the investors are very simple to figure out. They want their money to grow, and they want it to grow at a rate and at a speed that that appreciates their investment, that gives them a reasonable rate of return. Likewise, the ventures, the entrepreneurs, essentially there are going to be a variety of goals, but ultimately they want to make a good living, and they may want a good exit. They may want fame and fortune, but fundamentally, at first, as we look at the hierarchy of needs, the first thing they want to do is to be sustainable, and it's obviously counter to many programs to see the disenfranchisement of various stakeholders because of this process. So here's the real rub, is just because a business isn't investable doesn't mean it's a bad business. And so, again, we're going to talk about at least 96% are not going to be investable by today's numbers. And, but that, so at the end of these programs where people don't get investment, or they don't get good feedback based on investment criteria, then they may throw that idea away. They may totally disenfranchise, but that doesn't mean that was a bad idea or a bad business. And again, investment shouldn't be our criteria for sustainability or for something being good or not. Ultimately, the customer is the judge. Investors, again, are really easy to figure out. They simply follow traction. Traction is what they want, and they will find traction. We don't have to tell them where traction is. They will actually find it. And so they're actually probably the easiest ones to get to the party when the story is good. In fact, try keeping them out when there's a good story to tell. It's very hard. And so that's a different kind of attraction. You'll find that if you can set up a model where investors knock down your doors to get in, that's usually a lot better, and it changes the options that the ventures will have. Obviously, if you have no options, then you're going to give away a lot to get investment to the extent that you can attract it. But if your story is really good, you have much more leverage in terms of setting something up that is more favorable. So how do we fix this? How do we make the system work better? So again, based on what we've seen, there are really just three things we need to make sure we do. Number one is we need to focus on the problem. And again, you actually shouldn't say again, but you'll see problem here is in quotations. We don't know it's a problem yet. We need to validate that this problem exists. So we need to focus our programs on how do we qualify the fact that this problem exists, and that there's a market that's not only realizes they have the problem, but is desperate to solve it. We need to, there are three very simple qualities that create a prospect or that would predispose somebody to being a customer. They have to have three qualities. One is they have to have a need. Two is they have to have the resource to solve the need. In other words, they have to have money, and they have to have urgency. And we need to make sure that sort of all three of those exist. The time and effort we're going to waste on building something in the absence of that knowledge is enormous. I've done this several times actually, and it's quite painful. So I would prefer that not to do that again, and not to encourage others to do it again. So besides focusing on the problem, we need to focus on sales. We need to focus all of our efforts on sales. And it's actually really funny. What we find is that the best feedback happens when we ask someone for money. And so it's amazing the feedback you get before you ask for someone's business. It's going to be less instructive. It's going to be more supportive, but not necessarily helpful when you go to market. And so, sort of the best way to this is maybe a strong way to put it, but the best way to take the lie out of it is to say, are you ready to buy? Are we ready? Are you ready to move forward? Is there any reason why we shouldn't get you set up today? And when you ask that question, the level of feedback changes demonstrably. And if you want to test this, go in this afternoon and ask your boss for a raise. If you want to test how much your feedback will change when you ask for money, that's a great test. Just ask your boss, hey, I've been working pretty hard. I'd love to have a raise. And then the discussion around the value proposition will be pretty amazing. So again, the money is an amazing thing for actually testing. Are there legs? Is there an opportunity here or not? That transaction is key. And then the third and really most critical element here is to align all of the other elements of the program to the problem identification and validation and to generating sales. And so that's going to be who comes in to judge, what criteria we use, what speakers you have, all of those elements, what mentors you bring in, all of those things need to line up to the validation of sort of a ready market, ready and very motivated market, and to the generation of sales. So, as I said earlier, investors absolutely find you when it's appropriate, and really ultimately the easiest way to get somebody interested in what you're doing is to be interesting. And ideas aren't nearly as interesting as traction. And if you want to test this, look at the winners of almost any pitch event you'll go to or any program you'll go to that actually tells you who won. Almost 100% of them are the only ones in the room that have traction. Traction dominates everything. So the case studies are things that we'll offer as sort of examples of where you might go and what you might do, and sort of how does this sort of how do we take this idea and make it sort of whole. And again, we're going to challenge you a bit here, and hopefully this all makes sense. And we're going to be coming back on screen in probably 10 or 15 minutes. So if there are questions you have, please throw those in, and we'll not only go through the ones you've already submitted, but also the additional ones. So we're going to break this into two parts. So first, let's look at a couple of ideas for early stage events and programs. So these would be maybe first experience or first time entrepreneur participants or entrepreneur program participants, or again, earlier. And so kind of the key steps that we see is, number one, start with a problem pitch. Don't start with an idea pitch. You want to form the teams around the problem. You want them to focus on validating or ideally invalidating the problem. They need to learn, they need to become empathic and really understand their customer. For many that are working with the business model canvas, you'll know that has 9 sections to it. When we do this, when we've begun doing some events of this nature, and we actually black out 7 of the 9 different areas, and only have the students or ventures focus on the customer segment and the value proposition. And so all they're doing for the duration of their effort until so we're satisfied, we're past it, and that's going to be weeks. If it's a startup weekend like event, it's certainly going to be the duration of the weekend, but they're still not done with truly validating there's a market opportunity. But the idea being that we're just going to focus on that customer discovery process. So number one, having a clear customer segment, or one or two, and then what the value proposition is for that customer segment, and they need to test that. They need to make sure that that there is actually some there. So then, of course, we want them to create sales or pre-sales, and there are a lot of ways to do this. The whole actual sort of Kickstarter or that form of pre-sales is a great way to test ideas. Obviously, there are many others. We need to listen and iterate. So we're going to listen when there is a sale as to why people are buying. We need to ask those questions and find out why. And when people aren't, we need to listen and find out why. All of that is really good information. Again, being empathic. Ideally, we drive to a place where we're able to become sustainable. And then, of course, if it's a program and it's 12 weeks or it's a semester or maybe a year-long program, then we want to align our judging criteria with these objectives. So maybe there's a demo day at the end or something like that, but having definite alignment with this methodology, sort of focusing on the problem, market validation, traction, and so on, as opposed to sort of the investor criteria. That can come later, and again, it'll come only for a minority of the for the ventures that are going through any program. It's not appropriate for them all. And so some example programs that may be instructive for you. So it's a great program that's going on at the University of Lowell, or I'm sorry, I should say the University of Massachusetts in Lowell, Massachusetts. It's called the Difference Maker program. And it actually, you can probably even tell just by the name, this is one of the biggest and most successful on-campus entrepreneurship programs we've seen. They have thousands of students that participate every year. I mean, it is a huge program, and they're not focused, and as you can tell from the name, they're not focused on products or solutions. They're millennial generation in a way that is really extraordinary. What difference do you want to make? And that could be in your neighborhood, it could be in your classroom, it could be in your home, it could be in your community, it could be globally, whatever. We're not limiting you to that, but let's figure out what difference you want to make, and that's the way that they get at the problem, the existent problem, and that validation. But this program is so strong, I think it goes to sort of another level besides the sort of the idea of coming back to lean methodology, which all these sort of investor-focused programs that have accelerated right past customer discovery and right into sort of product development, and it just sort of short shrifts the whole customer discovery process. This program, the Difference Maker program, not only really embraces lean methodology, but really gets students who wouldn't otherwise imagine themselves as entrepreneurs to get entrepreneur knowledge and skills without even any reference to entrepreneurship. So they actually go through a process, and you'll see pretty much very limited references to entrepreneurship in any of their literature, any of their marketing material, and so on, because they're really appealing to this generation in a way that's very empathic to to the millennial generation. And again, all of this lean methodology is sort of woven in, but much more organically than sort of the textbook way. The other is, and it's really easy, and we've actually started doing quite a bit of this, is to do problem-focused pitch events and startup events. So we've actually done some knockoff startup weekends that were only problem-focused. We actually didn't allow solution pitches at the end of the weekend. We only had the teams get to a place where they were, sort of validating or invalidating the problem. And of course, again, over a 54-hour event, you're not going to be done with that. And so the criteria is quite a bit different for an event like this, as opposed to, again, the sort of venture investment criteria. You're much more evaluating the validity of the validation that the teams are doing. So you're looking at, who did they survey, or who did they interview? Was it friends and family, or did they actually go to, to actually engage people who had no investment in their happiness, and so people who didn't know them and so on, and then what was the process they went through besides who they talked to, but how did they actually go through that customer discovery process? So really understanding the quality of that customer discovery. It's pretty rare that any would have revenue at the end of an event like that, but certainly if they do, that's great. But really understanding how well that was done, and the results they got, and the next steps they have, and so on. But looking at that is really key. But you can embed this. You can take your existing programs and embed this methodology into it. And it's a very simple change, but it's really an enormous effect in terms of how things can and will improve based on these tweaks. So let's look at later stage events and programs. And this is, I think the early stage is really interesting, and the effect can be enormous. The later stage, I think, will tell you where this is all going. And for those that like quotes, you may remember Wayne Gretzky's quote when he was asked by a reporter how, what is it that makes him so much better than other hockey players? And he was always really good at this, but he said, other players go where the puck is, and the thing I do different is that I go where the puck is going. And if we were going to forecast where the puck is going, I think this sort of part about the later stage events and programs is really, I think, going to help quite a bit. So right now, the most sort of next level programs, the more that work with the more mature entrepreneurs. Today, there's generally a call for solutions, and I wouldn't even say that. It's really a call for products, and so instead, look at having a call for solutions, either to certain problems or in certain industries, maybe in fintech or health tech or ag tech, or whatever is sort of appropriate for your program or region, or solutions for certain roles. Maybe we've got we want to aim for solutions in big data, which would be obviously business analysis, or human resources, or healthcare or whatnot, and really sort of understanding and promoting, having a call for solutions in these certain industries, and then have a panel of judges that are potential buyers, as opposed to investors. Have them be potential buyers, and the winners, instead of getting the big check, the prize money, they get business, they get potential pilot opportunities, they get feedback, they get time with these buyers to understand what they're doing well and what they're not doing well, where the opportunities are in their industry. But change, let's solve problems that exist. And if we can, one of the other sort of attributes of this is most ecosystems have done really well at getting most of the key stakeholders involved. The ones in most ecosystems that still remains generally outside looking in are the corporations. And if corporations are engaged in ecosystems, more often than not, they're just looked at as donors. So, it's, how do we get, $5,000 out of XYZ Corporation to support our program? As opposed to really understanding the problems and challenges of the corporations or large employers or entities in our communities, and engaging them to come in and look at solutions that are aligned with or relevant to the problems that they're likely or that they have expressed they have. And so these opportunities can be so amazing. And again, the value proposition is a lot different for the corporations when you give them a solution that saves them millions of dollars or helps them make millions of dollars. And so if you want them to get engaged, again, if you want people to be interested, be interesting. And so if we can help solve bigger problems, number one is we're going to inform ventures about what needs to be solved. We're going to be a catalyst for venture development like none other. And also we're going to engage a stakeholder that is really the most powerful, because they're the consumers in our marketplace more often than not, at least for the B2B. And so getting in large companies, large consumers, will help us really create much more transaction and traction for the ventures that we work with. So some examples of this, and again, this is all fairly new, and there are really only just a few examples of this in the marketplace today. But this program, the first one, I'm not sure if it still exists anymore, but actually Brigham and Women's Hospital in Boston, that's Harvard University's teaching hospital, had a program, this was a couple of years ago, and about every quarter they would do what they called Pilot Shark Tank. And they would bring in somewhere between 5 and 10 ventures, and then the ventures would all pitch in front of a panel of 5 physicians. And so the results of the event were the successful pitchers would get a pilot opportunity. The doctors would bring that technology or that solution into their practice. And of course, not only did that create traction and monetary exchange, but it created incredible feedback and also an amazing reference client to say that your technology or solution is being used by Harvard University's teaching hospital. Not so bad, and certainly highly credible. So that's one sort of reference. Another is there's actually an accelerator, Beta Spring, in Rhode Island that has gone from for those who don't know, most accelerators today, 98% are run with an investment model. Some are totally free and sort of more community supported and don't take equity or give investment. But the lion's share of sort of accelerators out there give investment and take equity. And Beta Spring has sort of taken that model and flipped it on its head, and they actually are revenue based. So they take a percentage of revenue, and it's a whole sort of formula they use. But again, as opposed to being focused on the demo day at the end of the accelerator being about having a pretty baby for investors to look at, and this sort of race to investment where you short shrift the customer discovery process, their focus is 100% on traction and helping their ventures get revenue and get customers. And again, generally people don't buy things they don't want. And so as you start to get revenue, there's no better form of validation. And the third is something we've developed a model for, and I know there are a few other of these that we've seen or that are beginning to sort of come up, but the idea being first customer events or first customer pitch events. And so this is a little bit like what you might do as opposed to doing what Brigham and Women's Hospital was doing in Boston, where they were doing sort of in-house pitch events and then deciding whether or not to pilot various technologies. These would be community focused, larger events where you do a call for solutions in certain areas, and then the pitchers come in and pitch to a panel of judges. Ultimately, I think the best form of these, and we're really testing this model now. We've got a few different communities that are going to be hosting events like this. And really the best model of this is if you can create it so there's two-way dialogue. So not only do you have the ventures pitch and they get the pilot opportunity or the first customer opportunity, but then you also have the leaders from the various companies it could be a reverse pitch. I think there are a variety of ways to do this. It could be through speed dating, but ultimately you want the company leaders to socialize their next level problems. So, okay, so we've seen this cohort, we've seen this class of solutions. These are fine, these are good, and we're going to sort of adopt those and make the most sense. But here are some other things that we'd really love to solve, or here are some other areas that we want to do some work. And that becomes the call for the next program, because these things, ultimately the corporations, the large consumers, it's going to take a little bit of time in order for them to be as open as they would be. They're not always going to sort of share their most challenging issues out of the gate, and so we want to build the process of understanding. Again, just like you would with a customer, we're going to build our knowledge about their challenges, about their perspective, as we build trust, which takes time, relationship, interaction. And so you want to build into these programs that ability to get that information, not just at these events, but pre and post event as well, but as an organization really beginning to understand your key sort of large organization entities or stakeholders within your community. So, wow, that was a lot of information, and I'm just about to come back on screen and we'll hop into questions. But before we do, just a couple of quick things. Just so you know, our next webinar will be on Wednesday, March 8th. It's going to be focused on successful onboarding. So, and it really dovetails with this program in that, again, as you have ventures, students, individuals entering your program, one of the challenges we see is people not being set up for success when they go through programs. And there are a lot of ways, a lot of sort of challenges or pitfalls in that process of successfully onboarding and launching people into programs. And this is something we've sort of observed a lot of best practices, and we're going to share those. So please put that on your calendar. It'll be a lot of fun. And within a few days of today, maybe tomorrow or over the weekend, you'll get an email from us not only thanking you for participating, but you'll get a link to this webinar. And certainly we'd invite any feedback that you have. We love feedback, and there's nothing you'll say that will hurt our feelings. So please be brutal if appropriate, or laudatory if appropriate. But just whatever is sort of your perspective, it would be great to know. And certainly if you're interested in either talking more about these topics, please let us know that, or you'd like to learn more about what we do, we'd be glad to do that. And certainly we'd love to learn more about you and what you're doing. So let's get to your questions, and I'm going to take this off of screen sharing now. Give me just a second here as we come back on screen. Okay, so here I am, and I'm just going to grab the questions here. So again, feel Feel free to submit any questions right now. I don't have any additional questions, so I'm going to go into the ones that were pre-submitted, but feel free to throw in any others. I'm happy to address any. We definitely have a decent amount of time left. So, so here's the first question. What techniques work best in getting students to focus on customer discovery and customer development? I think, just a clear focus on, number one, the problem itself, and then again, validating or invalidating the problem. And it's so funny because we often sell this as sort of validation. At least what we're observing, it's equally as important to sell it as invalidation. It's actually a very good answer to invalidate something, and to invalidate that a problem exists, or that that people want to solve the problem, because it will save you so much time and money. And I should say, we've had, going back to sort of the programs that we've done so far in the problem pitch area. So these sort of knockoff startup weekend type events that we've helped facilitate, probably the best measure of how powerful this is the feedback we've gotten from these. And this is sort of a paraphrasing of many comments from the couple of events we've done. But essentially the comment is, I am so glad I didn't build something, because we didn't understand this problem at all. And so we didn't waste that time, we didn't waste the money, and ultimately this program has helped us realize what problem exists, and now we're going to work on sort of learning more about that and figuring out the best solution. But we have yet to have anybody go through this and be negative about it, and more be just so thankful that they didn't waste the time to build something, because they just really didn't understand the market they were looking at. And these are people who were maybe creating something for their college campus in which they have a fair amount of intimacy, or for their home or neighborhood or whatnot. So again, for places, they weren't going into places that they didn't have intimacy, but they were only seeing it from their perspective, not from the buyer's perspective. And so that's been really powerful. But again, the short answer to the simple question is, get focused on the problem, and let's first assure that the problem exists. There are really two things. One, does the problem exist, and is that customer desperate for a solution? Are they willing to pay, and are they highly urgent for a solution? And then is there a reasonable pool of those types of people that we can identify? Let's see, the next question. How have you redone your competitions to reflect the focus on customer discovery and customer development? Excuse me. Well, it's really what we just talked about, and that's sort of focus on the customer discovery and the problem, and then on sales, and align everything else to it. Really, those three steps. So align to the problem. Number one, assuring that it exists and that there are people that want it solved. Two is getting traction, sales. And then three is aligning criteria, judges, curriculum, all that to those two key elements. So number three, getting students to easily see the big picture and developing a feasibility analysis for a business that likely, parenthetically, that likely isn't going to be a real business. Well, a real or imagine, it's really the same exact steps, but feasibility starts with customer intimacy. And so again, if you're using the business model canvas, don't confuse them. I love the document, but it's way too advanced for most early stage entrepreneurs, and black out everything except for customer segment and value proposition. And again, just the magic is, don't leave those two things. Do not go on to box 3 or box 4 until you've really satisfied those first two elements. And it gets really easy. Figuring out the solution is actually really easy when you have a customer that is, and customer I mean by sort of a pool of customers who are giving you feedback, who can tell you about the problem and what effects it has, and all of those types of things. The solution actually gets reasonably easy when we know that, and not only that, we have a lot more dry powder left over when we create the solution, and that's really the goal, and that's what allows us to iterate as we go forward. It also, generating revenue makes us much less dependent. So number 4, how do we get our ventures to do appropriate research, such as contacting at least 50 contacts who you share your innovation with and get their feedback? Again, that's way advanced. We don't want to be sharing any of that until we've assured that there's a problem and that there's a ready market that is desperate to solve that problem. Again, you won't have any problem with them accepting the solution if you've developed it around their feedback, and that those tests are much easier. But first, let's assure there's a problem and that they're totally committed to solving it. It is something that they have to solve today, and they're desperate to do it. How do we get beyond the glamorization of raising a round of funding and showing them that there are other ways to access capital? Yeah, bootstrapping. 96% of ventures going through any program as a minimum should be experts on bootstrapping. So that it's just key. And so the prize money and all that stuff is totally distracting, this whole Shark Tank setup. And I think Shark Tank serves a really cool purpose, and I think there's a lot of good information and knowledge that comes from that, but we don't need to model that in our programs. In other words, there's one Shark Tank. That's good and it's great, but with all the the majority of other programs, the alignment should be to traction. And again, when we have traction, finding investment is super duper easy. That is super easy, but for any on this call that have dated, it's very hard to get a date when you're not interesting. Pretty easy to get one when you are. So let's help our ventures become interesting, and that really starts and ends with traction. Definitely key. So here's a little bit of a longer one. Last year, I prepared a feasibility study for a group interested in having an entrepreneur pitch event. My research matched exactly what you're saying, so that the event was postponed. I'm interested in hearing this webinar. In Dallas, our accelerators are not university-backed are struggling. Our universities that are backed by universities, the incubators and accelerators, are the only ones that are surviving because the universities, rather than the market, this is, I guess, the question, are the ones that are university-backed are the only ones that are surviving because the university, rather than the market, has more tolerance for risk. Well, I guess I'd just say that, yeah, the universities have other goals than the market. So the idea that the accelerators in any market are not succeeding, they're missing the mark in some way from a what's being produced. The product is not effective. So again, if we ask investors to come in and the ventures that we show them are not investable, which again, minimum of 96% are not, doesn't make them bad businesses. It just means they're not going to grow at the speed and to the scale that will create a reasonable return for someone else's money, for an investor's money. That could very well be a great business for the owner and for maybe even a few partners and for the employees and for the customers, but it may just not need or be something that an investor should or would want to get involved in. And so, yeah, I mean, I think universities are going to have different measures of success. The market, something that's more in the sort of free market is going to be more sensitive to market pressures, but a university certainly is first and foremost an education institution. And so that funding, and there's a lot of university pride and ego now attached to having an entrepreneur center. There are many universities, sort of coming into, besides all, the thousands that have already developed and built entrepreneur programs, there are more coming in every day. So, you think of the bureaucracy and ego that's sort of attached to that development and creation, but now there's physical buildings and expensive faculty and whatnot that are being brought on board to run these programs. So there's a fair amount of commitment that's sort of sunk into them. So yeah, I think universities are typically later adopters, and they'll probably be later adjusters, or even potentially, in this example, maybe even later failers than ones that are more closely tied to market pressures. So another question, let's see, our organization is funded by sponsorships and metrics based on ventures getting investments. How do we refocus and keep everyone engaged? So yeah, I think by everyone, so if we focus on, understanding the problem in customers in that customer segment, and validating or invalidating these problems, and we get ventures that are building things that are quickly adopted and that they get traction, the rest of the community is going to get interested pretty quick. Again, I think, try to do your best to keep investors out. They will find a way to get in. They'll find a way to connect to your ventures. So it's much easier to get people interested when you're interesting. And I see so many people spending time, how do we get more investors into our room and all that? Again, have a good story. They want to be there. They absolutely want to be there. That's the sort of mode they're in. But, don't worry about them. They'll come when it's appropriate, and it'll be obvious to you when it's appropriate. But they shouldn't sort of see all of your ventures, and just simply because not all of them are investable, and the more chaff they have to sort through, the less they're going to be excited to sort of come in and spend time with you. So give them, sort of the short list, if you will. And again, you don't want to discourage or to misinform the ventures that are, again, good businesses, but no matter how much they work or how hard they work or how long they do it, they're not going to be investable. Again, good businesses, and we don't want to discourage that. We want to find people that are job makers, not job takers. We need more taxpayers. This is all good. So how do we get students to think realistically? Stop giving the brochure with investment and buy yacht on it. Focus them on the hard stuff, the really hard stuff, which is true customer discovery, and that this is what it's really about. There are outliers, but outliers are exactly that. They're not the norm, and most of us actually need to do the hard work, and let's get them focused on the hard work, which ultimately is going to be the rewarding work. So our founders struggle with asking customers questions in such a way that they avoid receiving false positives. So false positives are hugely challenging when it comes to customer discovery. So again, getting, and that's why I was mentioning the criteria that we've now developed for judging these types of events now is really about the validity of that. How far away do they get from their centers of influence? How far do they get away from their friends and family? Or how far off campus did they get? And, what's the sort of pool that they went to, and it should be as removed as absolutely possible. For those who want more on this, I actually have some funny stories to relate, and I'm happy to do that, but I'm sensitive to time. How do we convince students and other organizations of the value of customer discovery? I think that's certainly, we've talked about that. And then the last question is, how do I maximize customer advice? I think, being open to it, and asking, what could you do better? Are there, if you could change our program or our offering or our solution, what would you change? If there are things that that you would want us to do that we're not doing, let's talk through those. I think the more you can have and give open-ended questions and just allow people to talk. And I think the biggest problem I see in the way people do customer discovery is, number one, they ask closed questions, and so they don't just get people talking. And two is, they're actually not empathic. They don't ask follow-up questions to really understand the meaning behind what people are saying. So open-ended questions, and then being empathic, again, not just taking the face value of what someone says, but digging in and understanding what they mean by that, and what would change if that could be fixed. What would change, understanding sort of their world well enough, or what happens when you have sort of have this problem or these results. So understanding sort of all of that, all the emotion, and all this sort of additional costs or opportunity that comes with either the problem or the solution. Again, being empathic and understanding it from this particular buying influence perspective, and if to companies, getting it from a few perspectives within the company, maybe in different departments that relate to your solution, is going to give you an even better perspective. So customer discovery, think of yourself like Columbo, and you're really just going in, you're digging, you're a detective, you're trying to find out really people's points of view in very discrete areas. So my goodness, this has been just a wonderful time. It's been great to have you all with us today. It is 1 o'clock here on the East Coast. I'm going to sign off for now, and really thank you very much for participating. We are again going to provide this as a recording. Certainly give us feedback, let us know what additional questions exist from you, and learn more about your organization, your particular challenges. And again, it's been a true pleasure, and hope you have a great rest of your day. Thanks. Bye for now.